So it's no secret that electric vehicles are the future of cars in America and around the world, so we need to be investing in the top companies in the EV sector, and that's what I've set out to do in this video. I'm going to be giving you guys my top 3 EV stocks to buy now in September 2023. Let's get into it. The first EV stock is going to be none other than Tesla. Obviously, I have to start out with Elon Musk's baby, and the reason that I'm going to bring up Tesla, some people might be like, oh, this is too big of a stock. They have a $777 billion market cap. There's no way that they're going to live up to this. It's just going to come down. However, there's a lot of stuff to be excited about for Tesla. One of those things being that they have an EPS of $3.33. Their PE ratio is 73, which would be high in most cases. However, with a company like Tesla having the type of growth that they're having under 100 PE is actually okay for my standards. And then also, if we take a look at here, you can see their revenue has gone up from 24 billion to 31 billion, 53 billion, and then 81 billion in revenue in 2022. And their earnings have been increasing from 820 million in losses, 720 million to 5.52 billion, and then 12.56 billion in earnings just last year. So these are things to be extremely excited about. And the fact is their ESG score keeps on beating estimates. In terms of recommendations, they have a 2.7, which leans to a buy from most analysts. And then also the price targets from most analysts have a high of 350 and their average is 240. However, with the growth company like Tesla, you can expect to be on the higher end of those price targets. So Tesla is definitely a company that you need to be on the lookout for. And then also, if we take a look at these financials and take a look at their most recent balance sheet, if we take a look here at June, they have $90 billion of total assets. Not only that, they have $43 billion of current assets, and total liabilities, they only have $27 billion of current liabilities. So their current assets far outweigh their current liabilities. That is a sign of a very strong company. And then their total debt is only at $2 billion for a company with $43 billion in current assets. They have a very strong balance sheet and a very strong income statement. This is just a very strong company that you need to have on your watch list or in your portfolio. Next up, we're going to have Rivian, and this is a EV company based out of Irvine, California. It's somewhere I actually previously lived, and they have a $22 billion market cap. Now, their performance outlook is green on every single metric from Yahoo Finance, and their EPS is going to be further behind just because they are further behind Tesla. However, this is a company that's been gaining a lot of steam recently. You can see their earnings. They have beat on all 4 of their past EPS earnings by 20 to 30 cents on each of them, which is very solid to see. Their financials, they're finally starting to do revenue now. They're kind of where Tesla was previously at, 55 million in revenue, and then last year going from 55 million in revenue to 1.66 billion in revenue, and even increasing their revenue by 1.5 billion. Their earnings only went down by about 2.5 billion. So you can expect them to finally start to make some headway here. And in Q2, you can see that they lost a lot less money and they started to do a lot more revenue. So they're starting to trend in the right direction. And as they start to do more revenue, they will eventually, just like Tesla, become profitable. And you can see here that they have a 2.2 rating from analysts, and then also the price targets are as high as $44 and an average of $29 when they're currently sitting at about $23. So this is a very solid company. And if we take a look at their balance sheet, take a look at their most recent balance sheet, they have total assets of 17 billion, current assets of 12 billion, and their total liabilities currently only 2.2 billion, and their total debt 3.3 billion. So they do have more debt than Tesla. However, their current assets far outweigh their debt and their current liabilities. So this is a very strong balance sheet and a company that can continue to make their cars and increase their revenue and eventually become profitable. So that's going to be it for Rivian. Finally, we have Lucid. Now they're going to be a similar company to Rivian, where they're $14 billion market cap, about $8 billion less than Rivian. However, they have luxury electric vehicles, which is very cool to hear about. Short term, they're supposed to go up. Long term, about push. Their EPS, just like Rivian, only in the negatives. Their earnings, they're not as solid as Rivian on beating on earnings. However, they are about 2 for 4. And then for their revenue, they're just like, Rivian, where they only had 27 million. Now they're at 608 million in revenue. And if we take a look at quarterly, their earnings have not been all that great, but there is still potential for them to continue to go up. I like Rivian a bit better than this stock right here, but they still have a buy recommendation from analysts and a price target as high as $10 and an average of $7.6, and they currently sit at about $6.30. If we take a look at their balance sheet, we can see that their most recent one, they have $9 billion in total assets, $6 billion in current assets, only about 885 million in current liabilities, and then total debt, they have about 2 billion, but still outweighed by current assets, so they have a solid balance sheet as well. So this is definitely a company that I would also keep on my watch list. So those are going to be the three stocks that I would either add to my portfolio or keep on my watch list: Lucid, Rivian, and Tesla. But what do you guys think? Did I miss out on any electric vehicles? Let me know in the comment section below. But other than that, make sure you guys leave a like and subscribe, and I'll see you in the next video. Peace.